Good morning, guys. This is Simon with Trade and Perform Coaching. I am doing answering a coaching client's question, and usually I find when someone has a question about a trade, there's more than one person that has a question about that trade. So let's go answer it. So a couple of things that I don't know about this setup. So this is what the client sent me, and that's what it looks like. And the question was, if I can zoom in here, was second trade is not due to the entry bar far out, to entry due to star and red bar printing. Okay, so I'm going to address what the trade is here and how I would handle exactly how I would handle this situation. So I think we need to get context first. So one broke the apex. So I would say in this case, this is how I would have traded it. I'm not exactly clear how this person traded it. It's important to note this was right after the Fed announcement, and I generally do not trade after the Fed announcement to begin with. Certainly not in the first few minutes because it is just nuts in terms of speed, execution, and things like that. Almost impossible. If I do trade it, it's cut on dramatic size cut, like 80% less than what I normally trade. So, with that being said, the first question was, um, I'm under the impression that he was looking to short, right? And one of the rules is if you break the apex, do you have a short? So all of that is fine, right? You did break the apex and you did get a trade setup. So if you follow the way we run the trade in the room, right? This was a break-even trade. Your entry would have been, if you were looking for a short, right? You broke the apex, you got the pink bar, and then the next bar, the point of control of the next bar closed below the pink bar. That's a short entry at the close of this bar. I have no idea how you could have possibly entered that trade quickly enough, but your scale on a 24 tick is going to be the close of this next bar, which is usually 6 points of profit, right? So then upon entry of this trade, once you get this scale at 13,076, it wasn't, let's see, 82. In this case, it was almost 8 points, but let's just call it 6 points. So now your close, so let's zoom in on this trade, right? So if you had shorted that, there's nothing wrong with shorting that trade there if you could move the pieces around quickly enough. Your first trade, so your entry would have bbeen here, your scale would have been here, and now your stop. So this would have been your scale. So now you're going to match your stop to your scale. So if you entered at 13,08275, here I'm going to make this big. Your stop should have gone 8875. And that's usually how it works out every time. So this ended up being a break-even trade, right? But let's say you're still pressing for the short side, right? So I always want if I'm going to short, right, I'm always going to want one of these pink bars within 2 bars of the first down bar. So let me explain that, AKA the apex. So if it's coming up, I want to say that again, I always want a pink bar right at the apex of these 2 bars. Now, if your thesis was that we were going to tank, that was fine. I have no problem with it. As it turns out, it was pretty insane both directions, right? So I'm going to go through and just show what the trades were in a step-by-step process, right? So this is not a trade right here. Why is it not a trade? I don't have a triangle up, nor do I have a pink bar within 2 bars of the apex, right? Now I come over here again. In this case, while I don't have a pink or purple bar, I do have the triangle, right? And anytime I get a triangle up, if I get price closed below that triangle, I personally am short every time. Again, this trade set up exactly the same. I'd be short here. So let me reset that trade. Again, I would not trade this. It's just too fast for me, right? 13,09475. Scale 13,089, my stop. So I have net zero risk on this, right? See how, again, I get 6 points on the trade. So I'm going to back this up 6 points. 1309,475 to let's see 95 plus 6 would be 01. So let's just call it, that would roughly be my stop right there, and I'll color it in yellow. That would give me a 1. So realize why this is important, because this stop now gives me almost immediately, I'd say 80% of the time, I get a triangle down once I get this configuration. I mean, I get triangle up or down. The next bar has the point of control, depending if I'm long or short, below and or above if I'm looking for the long, below the point of control, right? And then in this case, I would have I would have made further adjustments, right? So my stop originally was here, but now any price that closes above this bar, I'm now going to stop. I want to say that again. Any price that closes above the point of control of that bar will be my closeout. So I would close the trade there. And then finally, if I get a bar where the point of control is above the prior bar's point of control, that is an automatic exit for the trade. So ultimately, what this would have looked like for me, again, it's got to be reasonably fast enough, is my entry would have been here on this trade at 9.4. My scale would have been plus 6 points. So that's, let's say you're trading 2 contracts, right? That's $120. My net is, I'm going to end up at zero plus commissions, which is negligible, right? And then my closeout is going to be on this worst case scenario. My closeout is going to be on this trade right here for 13,08275 from 9.4. That's 12. So that's roughly 12 points for easy math, right? So that's 220 plus 5-6 points is 120 plus 220. That's $340 on 2 contracts here. You just got to multiply out with higher contracts, right? And then your maximum favorable excursion, meaning the most the trade went in your favor that you could have possibly covered at, would have been 13,06875. So when you think about that, that ended up being, after your first scale, you ended up at 9.4 to 6.8. So 9.4, 8.4, 7.4, 6.8, 24 points, or $500 a contract plus your first 6 points. So the maximum that would have been worth would have been 640, roughly $760 in this little move right here on 2 contracts. Just you got to multiply out as you increase contract size, right? Now, when I'm looking over here, I do not have a long. There's a long there, but I'm not going to discuss it. It requires a lot of knowledge to understand when you can and can't take it. So you just would have ended up covering here worst case scenario. Now, so I'm going to just go through this whole sequence. How would have I traded this? So I'm going to start from the beginning, right? They let the information out. Here's the big whoosh to the downside, right? So let's pretend you took all the trades in sequence, which I think is a better way to look at it, so you know what your win rate is. So remember, first of all, I'm not trading this. I did not touch my domes in this. I know that the Fed meeting's coming up at 1:30, 2:30 Eastern time. There's no way I'm touching any of this. Someone else can have it. It's not for me. But that being said, did a trade set up, right? Would be a fair question. And so this was insanely fast. If you'll look, this entire bar is pretty much a minute and a half long. That's just crazy. That's a move from 13,221. That's almost a 200-point move right there, right at the top of the hour. Obviously, the release was a little bit delayed, but it was almost a 200-point drop. So with that being said, right, I would like to break an apex. Let's just not even worry about this because this was just nuts. And let's just go over to the right from here of how I would trade this, right? If I'm going in sequence, I'm going to continue to show the trade. So the way we're going to do this, so we do it quickly, is the only question I'm going to ask is, do I get to break even on this trade following process, assuming that I can enter and exit orders quickly enough, right? So we already covered all of this over here. So my next trade would come. No. So purple bar followed by a star. I get my scale off. So this is profitable. We'll put a plus sign here, right? That was just a break even trade, but that's all I'm counting is did I get in or out of it. No pink bar within 2 bars of the apex, no trade, and no triangle up. This again doesn't qualify. This is this qualifies, right? So again, fast as heck, right? But this is my entry right here. Why? The price closes below the POC of the bar with the triangle up. Then I come down. Did I get to break even? Yes. So in this case, it actually went to profitability. So this is a plus. Trade 2, positive. Next, purple bar, star. That's a long for me, right? So I'm long here. I get my scale here. It obviously went to profit. That's trade 3. Worst case scenarios, I broke even on that trade. Again, assuming I can move the pieces around. Trade 4, pink bar. Next bar has the point of control below it. That's again is an automatic trade for me when I get that set up, and it goes to profit. So that's 1, 2, 3, 4. By the way, I suggest you just learn one setup at a time. Looking. Okay, this is a flat out stop. That's my first stop right there. Again, news. Keep going. No trade. This is a short right here. That goes profitable. Why? Pink bar, point of control below. So now I have one. So from where we've started this count, besides what's to the left, 1, 2, 3, 4. Right, 4 wins, 5 wins, 1 stop so far. Stop right here. Purple bar, triangle down, price gets above, immediate stop. So 5 wins, 2 stops. That's nothing for me. Okay, if I'm pricing the short on that, that is a short, right? I get triangle up, price closes below. So we're just going to count it, right? So I need a next bar to be down. Okay, this is a plus. Why? I've already gotten to break. Worst case scenarios, I'm going to break even on that trade. Obviously, it goes to profit. Now it goes again, right? Purple bar, star, right? Obviously, get the triangle up. That counts as break even or profitable, depending on how you scaled it and what it does. So far we've got 1, 2, 3, 4, 5, 6, 7 wins or break evens, 2 full stops. Again, purple bar, star. I don't know how anyone would possibly trade this, but this is a short. We need a down triangle. That's another. So that's 8. Right? So this is going so fast, it's ridiculous what you would be able to do or not be able to do. That's long. Let's see if it gets to scale. That's 9. And I think you get the point. Like we're just running the same trade. That's short. That gets to scale. That's 10. Right? Or it's at least break even, a 0 stop, or it goes to profit. No possible trade there. No trade. That's long. Down that star. That's scaled. That's 11. Now you let your trailer run or stop. And that's where you get paid big time right there. That was right after it started. I think that was actually the low. Let's see. Yeah, that was the low. So I would never, ever trade that time frame at all. But that's what it looked like. And you can see you did get set up for the launch over here. You get purple bar, point of control above, scaled. That's a win, right? You get triangle down, price closes above the point of control, triangle up. You have 0 risk, push. That's how the trade's supposed to work. Again, I want to emphasize this was a really, really brutally fast market. I would need the computer to execute all that. So that's that. But that's how the trade setups work. It's a little bit more gentle. That's what I'm looking at. And that's how you should get paid. So I'll post that for everybody because, again, I'm just taking the trade in sequence, and it just takes time to learn that sequence. But once you have it identified, you don't have to trade all of it, right? So like, I just want to step back for a second. Let's say your bias was long, right? So a good way to filter this out, right, which was, I think, part of the original question, right? So a good way to filter this out is I need to break this power bar, right? I break the power bar, purple bar, triangle down, price closes above. That's my long, right? Over here, I'm looking to break this. So I can eliminate the number of trades I'm taking by going, I have to break this, I have to break this. So nothing sets up here, right? So then I have to break this or this. Nothing sets up on any of this, right? Then I have to break this, right? That's my minimum. I break that, no trade sets up there. Then I have to break this, no trade sets up. See how it starts to, that slows your pace down, right? And as a matter of fact, what you end up with in this sequence is the first trade you would have been able to take long would have been this purple bar star, which gets you to break even and takes you to profit. And then you break the apex over here, purple bar, purple bar, point of control below purple bar, and that takes you to the short side, right? And then you broke the apex over here. You didn't get set up here, just, oh yeah, you did. You took a stop there, right? And now you're looking to break this hypothetically, or break this. You just follow the dots. You want to break an apex to trap a buyer or a seller, right? So you just broke an apex right there. That's long. Like I'd be long. It broke the apex, purple bar, star. I'm long. Next, if the next bar is up, my scale, I go to zero risk. I'm stopped on balance. I make $0 on this trade. I break an apex again. I can look for a long again, hypothetically. Again, usually it helps to have a bias. That's my long right there. I need to triangle up next, or I'm going to end up with a 10-point stop on this bar. And I get my risk off. I'm at zero risk. And I'm fine. Like, look, if I get my risk off 80% of the time, I don't take a full stop. And then out of those, half of those trades actually go to significant extensions. I'm totally happy, right? So if you're looking at trying to look at the range and going, I'm going to pop 200 or 300 points long or 200 or 300 points short, this is going to be difficult for you, right? These are really small time frames relative to that. You should be on a higher time frame, but it's the repetition of what I'm looking for. I personally am pretty much willing to take every triangle that gets beat every single time and every purple bar with a star. I'm just willing to do that. My numbers work out where I end up flat if the trade doesn't work the gross majority of the time, and I end up with a huge number of winners. It just doesn't bother me. That's not the case for everybody. Some people really get, like, let me give you an example. Let's just go through a hypothetical here. Let's say you thought the market was going lower, right? And you got short over here. Perfect entry, right? And you thought, oh, it's going to drop 200 points, right? Well, when I get over here, I'm going to end up long, right? So I had a great trade, but it's going to end up popping up and I'm going to end up long right over here. So I don't know exactly. And so if it was important to you to catch this whole rip, you're going to have to go to a higher time frame or just ignore the longs, right? So this annoys some people, right? I'll tell you exactly how I would have traded that sequence, assuming I could have traded it in a reasonable way. I'd have been short here, covered my risk right here, grabbed the extension, and I would have actually closed it out and maybe even flipped long there for a 10-point stop, right? But it's all right. I more than made my money. I'd be short here, risk off, and then I probably closed it out right here as soon as the point of control got above. It's a fast market, so they're all slamming on top of each other, right? And then I'm coming over here, short here, right? Again, I'd at latest covered here, and then I'm short again right here. And now I catch my rip, right? I may flip long. I don't flip long and short that often. I usually have a bias behind what I'm looking at. So I'm usually not going to go short, long, short, long, short, long. I'm usually going, I'm looking for shorts or I'm looking for longs and pressing one side, right? So I'm going to end up long, break even, and then short, stop and flip, right? I'm going to get paid out over here, right? Nothing here. I might have actually run the risk of having the trade come all the way back up against me. except this is a third wave, and I'm usually going to cover into a big wave like that. And then this is definitely long for me, and I got paid right there. There's no question about that. Um, that is definitely a long. There's zero question about that. So that's how I would have run that sequence as it was. I didn't do any of it. My best trade was over here in the morning at 6:30. In the morning my time, 7:30 East Coast, which was this. 5 a.m. Sorry, I'm off. Was that one? Oh, that's Tuesday. I need to get back to Wednesday. I apologize. I was like, that's not what it looks like. Let's go back one more time to Wednesday, 5:30 a.m. roughly. There it is. Okay, so I was looking short for lots of reasons here, right? I was not taking any long. So short star, break even, stopped break even, pink bar within 2 bars of the apex. I'm short the star. I have all my risk off, and now I was targeting. All the way down here for a reason. The volume point of control was way lower down there, and that's a 100-point rip right there. I was just ignoring all my longs and all my shorts through here. This is normally very choppy time, and I think I covered either just after or just before the last piece. I think I got 6, and then the scales were like 20, 50, and 100 or something to that extent on the trade, and that's what I was looking for. And then after the open, I noticed certain things that actually made me think we were going to go lower initially. So that's my 2 cents, and yeah. So I hope that helps, guys. Have a great day. Oh, by the way, if you're interested in seeing what goes on in the room, this is how you get a hold of me. 1 second. TP. You send an email to tradeandperform@gmail.com, and I'm happy to extend a 3-day pass to you. Okay, have a great day, guys. That's the coaching session for the morning.